All right, let's get a check on the global economy now. We see artificial intelligence continues to reshape the technology landscape, and one of its biggest beneficiaries has delivered another blockbuster quarter. U.S. software giant Palantir Technologies posted a 93% jump in second quarter revenue. That's at $1.94 billion. Revenue growth 93% year-on-year higher. Adjusted earnings per share, that's at 41 cents. EPS estimate was 34 cents. Net income $1.06 billion. Operating margin 56% higher. Then we see their free cash flow there at $1.22 billion. So that's the latest one for Palantir. They're smashing expectations from Wall Street. It also raised its full year revenue forecast as much as $8.16 billion. The strong performance that was driven by surging commercial and government demand in the United States, sending the stock sharply higher in after-hours trading and reinforcing investor confidence in the AI investment story. We know investors are watching out for the AI spend there. Then they updated their 2026 guidance, moving revenue to between $8.15 billion to $8.16 billion. Adjusted operating income $4.89 to about $4.90 billion. Adjusted free cash flow about $4.5 to $4.7 billion. So when the next earnings come out, they should match this to smash expectations again. All right, let's look at how the big investors, what they're doing now. Cathy Wood's ARK Invest is making another notable shift in its technology portfolio. We see the investment firm sold shares of gaming platform Roblox while increasing its position in Amazon, purchasing more than 73,800 shares worth about $20 million. ARK also added to its holding in AI cloud provider CoreWeave and cryptocurrency exchange Coinbase, underscoring its continued conviction in artificial intelligence and digital assets. The latest portfolio moves come as investors closely monitor the firm's positioning following a strong rally in major technology stocks. We see the U.S. government is preparing to borrow more than previously expected, highlighting mounting fiscal funding needs. The U.S. Treasury has raised its third quarter borrowing estimate to $739 billion, up about $68 billion from its May forecast. Citing weaker than expected cash flows, the Treasury expects to end September with a cash balance of $950 billion, while fourth quarter borrowing is projected at $628 billion. Investors are now awaiting the Treasury's quarterly refunding announcement, which could provide fresh clues on the outlook for U.S. bond issuance and borrowing costs. And for the pizza lovers there, pizza demand proved resilient in the first half of the year as Domino's Pizza Group delivered the strongest sales and profit, helped by soccer, the World Cup, and successful new product launches. The company reported a 3.6% rise in underlying core profit to $66.2 million. Profit growth there up by 3.6% year-on-year. Revenue growth 6.7% higher. System sales growth, that's about 6.1% up year-on-year. Like-for-like sales, that's 4.9% higher. Order growth, just about 1.6%. Year-on-year. So that's another good one there, beating expectations. That's for Domino's Pizza. Let's look at the automobile industry now. See Toyota, they reported a mixed start to its new financial year, with quarterly operating profit declining as geopolitical tension and higher costs that weighed on performance. The Japanese automaker posted first quarter operating income of 1.06 trillion yen. See revenue there at 13.52 trillion. Revenue growth, that's about 10.4% higher. And we see the operating income there, 1.06 trillion. Let's look at guidance for the rest of the calendar year now. They did put out guidance there. So sales revenue, they're looking at about 54 trillion yen. Previous forecast was 51 trillion. So that's an upgrade there to 54 trillion. Operating income 3.4 trillion yen. And we see previous forecast at 3 trillion. So we see an upgrade there for guidance from this auto maker. All right, let's look at other matters now. Germany's Lufthansa, they've cut their 2026 profit outlook after soaring fuel costs And strike-related disruption sharply reduced second quarter earnings. The airline reported adjusted operating profit of 383 million euros, down from 870 million euros a year earlier, despite continued strong travel demand. Lufthansa now expects full-year adjusted EBIT of between 1.7 billion to 2.2 billion euros, warning that fuel price volatility and rising operating costs will continue to weigh on performance. And Italy recorded a 13.4 billion euro budget surplus in July, supported by a seasonal surge in tax collections, according to the country's treasury. While the surplus was slightly lower than the 14.1 billion euros recorded a year earlier, it reflects the annual boost from mid-year tax payment deadlines. Italy typically posts budget deficits for most other months, making July one of the strongest periods for government finances. And we see India's government is pressing ahead with a major stake sale in Life Insurance Corporation, offering shares at an 11% discount to the previous closing price in a bid to boost public ownership. The offer for sale could raise up to 314 billion rupees, for about $3.3 billion, making it one of the country's largest equity sales in recent years. The move is aimed at helping LIC meet regulatory minimum public shareholding requirements by May 2027, while advancing the government's broader investment program. And those are the top stories for the global economy. It's back to Ini.